G'day everyone, welcome to the global and Australian stock market update for the 5th of July. We've had a very turbulent week for a couple of reasons, and with the Greek referendum today, that is likely to cause markets to go significantly in one way or the other on Monday morning. It would be most unusual if that does not happen. However, I believe that the impacts of that will be fairly short term. They'll be emotionally driven, and that the markets will fairly quickly get back to the direction in which they should be going anyway. So we won't know the outcome until late tonight, but let's just see how that pans out. So let's have a look now at what happened last week. It was very turbulent, as I said. Greece as a country is basically on its knees, and we've been observing through most of this the politics of the Greek government against the European interests. But just of late, we've started seeing a lot of footage of what it actually means to people in Greece. And it really is quite critical in terms of their just access to basic things like food and medicine. It really is quite critical, and that's why I believe that the vote will come in as a yes vote as the more likely outcome, because I think they are just so stretched to the limit that I think they've got to find a way forward. And whilst it's not clear what the better outcome is long term, there's no question if they stay on the current course they're in and leave the euro, then they would have several years of extraordinary pain. So that's why I think the yes vote will occur. I think there'll be a deal done, and markets will probably rally fairly hard. However, we won't know that until we know the outcome. The second major thing that caused the turbulence last week, of course, was the crash in the China index. But when we talk about a crash, I mean, it's really only come back to the level that it was trading at about 3 months ago. So it's really just erased the just absolutely stupid parabolic rise that it had gone through, where people just completely forgot about value. And I guess there's probably a lot of people coming to the market who really haven't been in the market before. The problem that we now may face here in Australia in terms of impact on our market is that they've now effectively interlinked bubbles in the property market and in the stock market. And they've done that because a lot of the stock market rise has been due to the availability of margin lending and extreme margin lending. And people have even been, borrowing against their homes to then further margin lend. And the authorities now, to try and ease the pain of the margin calls, which is what's caused the crash in the last week, is that they're now allowed to use their homes as collateral to back these margin loans against their stock holdings. I mean, this is just lunacy. So anything could happen in China over the next few months. It's really potentially quite a concerning situation. We'll have a quick look at the China index in just a minute. The American stocks, the S&P 500, ended up losing 24 points for the week. So after 8 successive weeks of not moving more than 1% in any direction, we finally got a bit of a crack to the downside. So there was some stock volatility, and the volatility index went mildly higher, but not a great deal, not nearly as much as you would expect. So the trend of the S&P 500 still remains very much intact, as we'll see. And I think any weakness, if the vote in Greece today is no, then I think you'll see some short-term downside. But I think that should be quite short-term and probably present a buying opportunity. That's at least how I'm seeing it at the moment. So let's take a look at the charts. We'll start with the S&P 500. And you can see after that very, very tight period through here where the market effectively went nowhere, we finally got a crack down. It was Monday, was a fairly significant drop, but then the market managed to recoup about half of that. It was a shortened week with the Independence Day holiday, and it managed to pull back about 35 or 40% of that loss. and we'll see what happens next week. Now, if we go to the China index, so this is the Shanghai Composite. So I'll just pan back and give you a bigger picture look at what's been going on in China. So they tend to have these massive stock market bubbles. We had one that built up into October of 2007. So the index had gone from around 1,200 to about 6,000. So it had gone up 500% in very short order. Naturally, that completely fell apart. We then got a period of extended consolidation. So the market, the index really did very little from around October 2012 until November 2014, so about 2 years. We then got this parabolic surge, which is just crazy, wasn't being backed by any fundamentals. And now, of course, because it was built on margin loans, then it's just come tumbling straight back down again. So it's been a fairly severe correction. So we'll just have to see where that actually stabilises. Now, turning to the Australian market, the ASX 200 index lost just 7 points on the week. Materials were down sharply with the iron ore price cracking back under $60. And also energy stocks were impacted to a lesser degree as well. I find it very difficult to see 6,000 points being achieved this year. Lots of commentators are still talking about 6,000 points, but I really think it defies the facts. And I think a lot of them are just thinking, well, we're at 5,500 now, we'll add on X amount and that should get us to 6,000 because that's what always happens. But a lot of things have changed in the Australian market, in the environment in the last year or so. And I think with banks facing a lot of increasing headwinds due to the requirement to hold more capital, the requirement to increase their provision for bad and doubtful debts, with a slowing economy, I find it, and the fact that they're already fully valued, I find it extremely difficult to see how the banks are going to perform well enough to get us up to 6,000. And of course, we've then got the materials and energy stocks, so the BHPs and the Rios, Woodsides, those sort of stocks. It's really hard to see them rebounding either. In addition, we've got most small caps in Australia under pressure. So generally, and I've really been pointing to this pretty much all year, this is just not a good market to be in. It really isn't. The reward for risk in the Australian market is unattractive. Let's have a look at the Australian index just for the record. So you can see a reasonable amount of volatility, certainly a lot more volatility than the Australian market, and you can see that there is definitely a downtrend in place. We can actually put a real definite trend channel around that. So the Australian market index is trending down and not looking pretty at all. Now, just while I'm here, we'll have a quick look at the gold chart. So there's the gold chart on a weekly, and this is, I'm just sounding like a broken record every week. When it comes to precious metals, there's been effectively no change. That's the weekly chart. Still stuck in this big wedge. There's the daily chart. So not a lot happening in the gold market. And if we look at the actual gold stocks themselves, this is the HUI index in America. You can see there's a very, very strong downtrend in stocks. So that's not a good sign for the price of gold. And I think the possibility of gold breaking down to 1,000 is quite real. So just to confirm that, gold was lower by $7 on the week, and we've still got no resolution of this major wedge pattern that's been under development now for the best part of 2 years. And I've covered off on those other points. Turning now to copper, was steady around 260 again, and that was really pretty much in keeping with the US dollar. The Australian dollar, by the way, broke down quite severely on Friday with the iron ore price and dropped a couple of cents. So we're down in the low $75 cent mark now. Crude oil, I've been saying for weeks, it had to break lower, and it did. Finally broke down to 55, and I think further weakness in crude oil is also likely. But that will, of course, depend a bit on what happens to the US dollar, and that depends a bit on what happens in Greece. So all these things are interlinked. There's the chart for spot copper, so it's been steady over the last 3 or 4 weeks. So finally, just wrapping it up, when there is short-term significant volatility, and we haven't really seen that yet, but we very well could over the next month or two, it's critical to do the following things. Stay with the highest quality stocks and businesses that you can find. If you play around in speculative stocks or low quality stocks, you are going to get burnt. There's really no doubt about that. Secondly, you need to let the market come to you. So that means you've got to know what price you're comfortable buying a particular stock at, what represents good value, and let the market come to you. And if that means that you've got to sit in cash for an extended period of time, then so be it. Because the reality is that if you position well into stocks, you can make a year's return in a month or even a few weeks. You don't have to have your money exposed in the market to generate a very good return over a 12-month period. You can make it all in a very concentrated period. So why would you feel the need to have your funds actually working in the market when it may not be a good time to do so? And thirdly, and this is really important, you've really got to have the courage to pull the trigger. And this is where most people struggle and most people need assistance. It's one thing to know what you want to do, but when the market is falling apart and the media is screaming negative headlines, it's actually quite difficult for most people to actually pull the trigger at the right time. And that's where I think that I have been able to assist lots of people over the years with that side of it. So for non-members who are watching this video, if you want to talk to me, understand more about what I do and how I can help you, then there's my contact details. All eyes will be on Greece this afternoon, and let's see how that plays out, and hence what impact it'll have on stock markets on Monday morning. That's all for this week. Cheers.